Sinjuri, nselmilkom nilqakom għal edizzjoni oħra ta' Flusek. Fil-programm tal-lum ser nkunu qed niddiskutu r-riżultati finanzjarji u kif ħabbar il-Bank of Valletta PLC għall-ewwel 6 xhur tas-sena. Il-mistieden tagħna huwa Mr. Hunkin, il-kap eżekuttiv tal-Bank of Valletta. Mr. Hunkin, welcome to Flusek.
Thank you.
I was just telling the viewers that we'll be discussing the results, the financial results of Bank of Valletta. But before we start discussing these results, maybe you can tell us a bit about yourself so that the viewer, because it's your first appearance on Flusek.
It is, and thank you. Well, I'm a career banker. I went into banking straight from school. I've worked in banking all of my life. I've worked in a number of different locations, so obviously UK mainly, but I've worked in Australia, New Zealand and Asia. Personally, I'm a family man and I enjoy sports, particularly rugby.
Okay. Bank of Valletta has just announced a profit before tax of 13.8 million, a decrease of 75% from last year's comparative. What led to this drastic decrease in profits?
So primarily it's, as we've all been impacted, it's COVID related.
Mm-hmm.
So 25 million of the drop in profits was either directly or indirectly attributable to the COVID situation. It's impacted our business through the door levels. It's impacted our credit losses, because although we haven't suffered losses, what we've done is provided for future events to make sure that we're well protected. Mm-hmm. But the vast majority of it is down to COVID. There are other issues as well in terms of we are investing, which is increasing our costs, and market interest rates have brought down a margin. So we're seeing a smaller, lower level of return on the investments that we as a bank make.
Okay. As you have stated, the COVID-19 pandemic has had an impact on your financial results. To what extent did the impact affect the results, and how did the bank deal with COVID-19 in general?
So the results have been impacted because we closed our branches for some weeks, or had very, very limited activity in a number of branches. So normal business levels have been much lower. Okay. We've also seen things like tourists not coming over, so we've seen much lower exchange income. Businesses not transacting as much, so we haven't seen as much foreign payments or turnover. And the commissions we earn on card payments, for example, were 40% down on normal levels. So from a business impact, it's been that new business level, lower commissions, lower trading income, but also then we've got credit position. Okay. So many customers we've supported through the Malta Development Bank scheme, and we've been able to provide loans and facilities to keep those businesses going, and also moratoria or relief on payments for many of our personal customers as well. But what banks do is they provide for future losses. So given the uncertainty in the current world, we've increased our provision for losses by 10 million, and this has also impacted the trading position relative to last year.
Net interest income, the main driver of revenue, has decreased. What has led to this decrease besides COVID-19?
So fundamentally within the business, the interest rates in the whole European marketplace are at an all-time low, and we have a balance sheet that has 12 billion of our customers' deposits with us, and we only lend to customers 4 billion, which means we have a big surplus of investments that the bank then has to make. Okay. So the bank invests that money with either the central banks or in bonds or other markets, but the bonds and the market interest rates have come down so low that the return we have been getting on our investment is significantly lower. Now, for example, we have to put 3 or 4 billion on deposit with the European central banks or the central bank here in Malta, and we get negative interest rates on that. And that has been growing, and these lower interest rates and the negative interest rates we pay when we invest money have really hit our net interest margin.
Commissions and trading profits have also fallen substantially. What are the main reasons for this?
Yeah, so as I kind of alluded to, Nikki, it was the lack of tourism, the lower levels of corporate trade internationally. So certainly international payments and foreign exchange levels have reduced. But additionally, we've been de-risking, as has been talked about in the press in recent months. And what this means is that we have tried to make sure we are doing business with those who have a clear nexus with Malta, and a number of businesses where it was very difficult for us to maintain a relationship, either because we couldn't get the necessary information or they were perhaps trading in higher risk jurisdictions. We've been retrenching from some aspects of international business. So we knowingly have pulled back from certain areas, and that has reduced some of our foreign payment income. But as I say, also just simple things like the volume of customers using credit cards or debit cards, and certainly foreign tourists coming over, that's impacted our credit card commission by 40% at the peak. Now what I would say is we're starting to see that come back, and if we, touch wood, come out the other side without a second wave on COVID, we would hope to see a good steady recovery coming through.
Thanks. We're going to stop here for a few minutes for a commercial break. Għanamlu waqfa qasira ta' ftit riklami, Flusek irritorna biktar mistoqsijiet. Nilqakom lura l-Flusek, infakarkom li konna qed nitkellmu ma' Mr. Hunkin, il-kap eżekuttiv tal-Bank of Valletta Group, sabiex nitkellmu fuq ir-riżultati tal-bank. Mr. Hunkin, we were, before the commercial break, you referred to the COVID Assist scheme. Maybe you can elaborate a bit further on that?
Yes, of course. So the Malta Development Bank worked very quickly to come up with some support schemes for businesses here in Malta, and we're very quick to give a very good solution for government support to these businesses. In BOV, we moved quickly. We were the first bank to sign up for the scheme, and we've helped over 3,000 customers with some 200 million of loans that we've agreed to support businesses. And this scheme continues, and we continue to work with customers who are feeling the effects of the prolonged COVID period.
While the income of the bank fell, costs have increased by 8.2 million. What has led to this increase in the costs?
So there are a couple of drivers behind the increased costs. Firstly, we've been investing a lot more in making sure we have a sustainable bank for the long term with effective risk management and governance controls. So we've invested in new people into particularly the risk and compliance areas. But also we've invested in new systems. So we replaced our core banking system that was rather outdated, and we successfully migrated to a whole new banking platform over the New Year period 19 to 20. That investment was significant because it creates a platform for us to develop new digital capabilities going forward. But the investment we've made in the new system, we now have to start providing an annual depreciation cost, and that's increased our IT costs as we've moved into the new system. So investment in new people and investment in systems is what's particularly driven up our cost base.
The net impairment charge is up considerably as well. This is to be expected in the current environment. But how did the bank arrive at the figure of 7.4 million?
So this is a net figure, and under the accounting regulations there's something called IFRS 9 which drives the way in which we have to make provisions. But what we've done is there is a model that calculates the predicted losses in the future, and what we've done is taken the Central Bank of Malta economic forecasts that has unemployment, GDP and so on, and we've applied the worst case into our models. And what that does is drive up a higher level of predicted future losses that we make a provision for today. In doing that and some other prudent steps, that increased our provisions by 10 million. euros. So we've got quite a substantial level of buffer in the event that we start to see companies struggle further under the COVID environment. But net of that, we have been focused on some long outstanding debt positions, and we saw some good recoveries from historic debts that had previously been written off, and we've recovered to bring it back down to the net 7.4.
Loans and advances to customers have increased slightly, which indicates that you are still open for business. How are you assisting your customers during these difficult times?
So we've already talked about the MDB scheme. We've been working very closely with all of our customers. Those who have no income, so certainly hotels would be a good example. Their income has dried up and their normal pattern of trading has been seriously impacted. So we've been working alongside businesses who've been feeling this effect, looking at how we can provide either moratoria, so they don't have to pay existing loans, or new loans and with payment holidays to help them through these periods. But always working with them to make sure that when we are in a post-COVID world, that customers can afford the new levels of debt that they've got to sustain. On the personal side, we've helped thousands of customers who have asked for a payment holiday on their home loans, and we've made significant support arrangements via our branches directly with customers through our call centres to make sure that people are able to cope as best they can in difficult circumstances.
Can you give us some information about the bank's current pending litigations?
Yeah. So historically, there were three key litigations. I mean, obviously, we have a number of smaller ongoing litigations, but there were three key ones. One was the Valletta Property Fund, which the courts settled with us. Was found in our favour late last year, so that one has gone away, which left two key cases against us. The first one is the Swedish Pensions Agency, who have a claim against us, and I've been working very closely with them directly and with lawyers, and we've entered a mediation process, and I hope very shortly to be able to announce that we've settled on a satisfactory basis with the Pensions Agency in Sweden. On the Julimar case, there's been some recent press. Our position here is quite simple. We have very strong legal advice from an independent leading information source in Italy that this case has no merits. And we continue with that view. Nothing has changed. But given the unique circumstances of the case, the fact that it is so protracted and that the bank is feeling the effect of costs of running the litigation and lawyers and so on, we decided some time ago that we would try and come to an agreement with the Julimar case, the curators of the Julimar situation, to see if we could reach a practical, pragmatic out-of-court solution. There has been no change in our view that the case has no merits. We have made a sensible, practical offer to try and reach a conclusion. I remain hopeful that we will be able to work out a practical solution in this case, and we're working hard on that.
Good. Shareholders of the bank are obviously concerned with the results, especially in view that no dividends will be paid. How are you looking at the future of the bank, both from the revenue side as well as from the cost side?
Yeah. So we've just developed a new strategy, but there are three things dragging back the bank's sustainable profitability, really. The first is the cases that we've just discussed, and I'm hopeful that we can resolve those so that uncertainty around a contingent liability is removed. In some ways that can place a strain on us from a capital perspective, because we need to make sure that any eventuality is covered. Now, we think we have more than sufficient provisions in that, and once we can finally close those two cases off, then I think that will give a lot more certainty and remove uncertainty in relation to our future profitability. So that's the first. key thing. The second is we've been going through a program of making sure the bank is strong from a risk perspective, resilient, meets all regulatory requirements and is fit for the future. This stability program we've been running through, we're continuing in this year, but we've made excellent progress, and I would see that coming towards a close towards the back end of this year. On the income and cost side, it's not a cost issue for us because we think we can invest in the right spaces. Okay. But once we've simplified and improved our processes, got through some of the issues we've been facing, and have now the technological capability to move forward, then I can see our revenue streams returning, and certainly post-COVID returning to good levels.
Great. In your announcement, you have made reference to a fresh strategic plan that will transform Bank of Valletta into a more efficient, more digital and more customer-oriented bank. Can you give us some insight into this new strategy you mentioned?
Yes, of course, thank you. It kind of pulls together a few of the strands we've been discussing in our time here, but we invested in a new core banking platform because our old one was out of date and didn't enable us to have the sort of connectivity we need to make digital changes. So the new platform that we successfully migrated to in December, January, at the turn of the year, gives us excellent opportunities to develop new straight-through processing, automation, simpler processes for our customers. It takes too long to open accounts or to sell products. So we will speed up these processes and simplify them and make them a lot easier for customers. And that will give us the opportunity to serve customers better, give them a better product mix, a more suitable product set. But really just get on the customer face foot and serve more customers once again. That will really help. So digitisation and simplification is a key part of what we need to do. We're also looking at maintaining our branch presence around the place. We see our branches as a competitive advantage. We're here to serve customers in places. We may serve them differently, and we're looking to automate and straight-through process, but we're hoping to make sure that we have really good representation across Malta and Gozo, and that provides the footfall and the customer access that we need to grow. But I do see the strategy delivering far more sustainability and certainty of income once we're through the current issues of the two contingent cases. We've de-risked and we've stabilised the bank. So going forward, the strategy will deliver a much more stable level of return and hopefully lead us to sustain a consistent level of dividends and returns for all of our stakeholders.
Mr. Hunkin, thank you for this interview and thank you for your time. I wish you and Bank of Valletta continued success in the future and look forward to having you again on this program.
Thank you very much, Nikki.
Bekk wasalna fit-tmiem edizzjoni ta' Flusek minn ħati għaj ringrazzjamenti pal dejjem imorru għal New Age Media, l-producers tal-programm, il-crew tekniku ta' Net Television, ringrazzja l-sponsors tiegħi fuq kollox ilkom tal-li segwejtuna. Grazzi u saħħa.